Welcome, ladies and gentlemen, to Shopping Centre News' event of 2020. We've got a great panel discussion today, and we have some industry leaders in Australia. It's a panel discussion, and I would like to introduce the moderator and our senior executive who's going to control that. I'd like to introduce Peter Allen, who is chairman of the Shopping Centre Council of Australia and who you all know is Chief Executive Officer of Scentre Group. He will conduct this panel discussion for the next hour, and I will leave it over to him. Peter, thank you.
Thanks, Michael. Good afternoon, everyone. It's really great to be here. And I'd like to also extend my thanks to everyone who's joined today, not just here, but also online, which is fantastic. I think I'd also like to, as the Chairman of the Shopping Centre Council, basically give one big industry thank you on behalf of everyone here and all the people that work in the shopping centre industry. You know, our contractors, our suppliers, our retail partners, it's been a really tough year. We're coming out of this pretty well. Our teams and businesses have really been on the front line in terms of the pandemic. And I certainly know how much we value the teams and all the work and effort that they've gone to make sure that our customers and our staff have been kept safe. I know I speak on everyone's behalf when I say I couldn't be prouder of the work that we do in the industry. You know, we've really shown our true colours as an organisation, and I hope that we're able to learn a number of lessons out of what's gone through 2020 and how we can grow and strengthen our relationships with our communities. Importantly, we're always thinking moving forward as an industry. And I think when you look at the GDP numbers coming out yesterday, we're going to be a big part of the economic recovery of Australia. So on that note, I'd like to welcome our panellists who have joined me here today. We're going to hear to talk about shopping centres post-pandemic and how they will change and what will be different. And so my panel members are Greg Chubb, Charter Hall Retail CEO, to my left, Stewie Hutchins, Dex's Executive General Manager, Industrial Retail and Healthcare. We got next? Michelle Tierney, SCA Property Group Chief Operating Officer. Peter Huddle, who is the Vicinity's Chief Operating Officer. And then David McNamara, who's the Lend-Lease Head of Retail. So let's kick off probably the number one topic of 2020, which is health and safety. And so when you consider the COVID-19 and how we've all adapted to the health and safety protocols, do you think we're going to be operating our centres any differently in 2021? And what have we learnt in terms of doing that? And maybe, Greg, I'll start with you.
I think, Peter, there's always been a high duty of care. I look at our business, for example. We get about 150 million customer visitations through our assets annually. So we've always been focused on the concept of safety. And I know at the Shopping Centre Council it's something we talk about a lot. But I think there's just some finer details that are starting to emerge. And ultimately, we're led by our consumers, our customers, and I think they're demanding more safety and more security around hygiene and the practices that we undertake, and they're keeping a very close eye on the environments that we manage on a day-to-day basis. So I think it just sort of heightens the focus, but I think as an industry we do a very good job, and it'll be a continuation of that.
Yeah. And Michelle, what do you think is going to continue into 2021 from a health and safety? Are we going to keep the physical distancing, hand sanitisers?
Oh, absolutely. I think, as Greg's mentioned, consumers' expectations have really risen significantly around, cleanliness and also, their own sort of, physical and health safety. So we're definitely going to continue to see the hand sanitisers. I think they're ubiquitous now. We've seen Woolworths, Coles roll out the Perspex checkout. So I think we're going to continue to see some of these other, innovations, I guess, in, health, safety, cleanliness in our assets. Absolutely.
Yeah, okay. And then, Peter, in terms of our businesses, we've all had interactions with the health authorities and throughout the whole pandemic. And what do you think has been done from a positive side, but probably more importantly, from an industry? What can we advise the health ministers of each state to be able to institute best practice into 2021?
Advising health ministers, that's been a challenge. Look, so majority of our company and the majority of their business is based in Victoria, and unfortunately and inaccurately, we had a a little shopping centre called Chadstone, which had a bit of a cluster outbreak, and so it had a huge amount of focus. In the end, it ended up being a positive. Despite all the media around the health authority and their reactions to Victoria, it actually brought us right in with the health authorities, who were able to grab Victorian Police, were able to grab other members of state and local government together, and we actually had a mini CMT, or a mini incident management team, that led us to actually provide COVID safe operating plans in conjunction with the health authorities across Chadstone and then across the rest of our portfolio. And it allowed us to really engage at levels we needed to get things done for our portfolio in Victoria. So fundamentally, I think there will be further engagement, but because so much was going on around COVID over the course of 2020, it required that type of incident to get the right level of engagement at the right level of government to get cut through. And that was the most positive thing we got out of it. Also, a bit of education. I mean, fundamentally, the health authorities, in our experience, don't really understand our industry. They don't understand that the fact that we don't control everything that occurs within our retailer stores. In fact, we control very little. So that education through the process that we went through, I think will be helpful moving into 2021.
And through that education process, David, maybe you can comment on, is there something which we can do better as an industry, with the health authorities to make sure there's probably a greater consistent approach in terms of how they deal with potential incidents?
Yeah, I think the states have all responded quite differently, and clearly when we look at the interactions, those states that have been quite proactive, we've actually ended up with pretty good results. So I think the key here is to engage early with government and to engage proactively and really look at solutions. And I think the industry's advocacy group was very strong in this space. So as an industry, I think we certainly went in, we had a collaborative view, if you like, across the board, and we were able to influence in a way that possibly we haven't been able to in previous times.
Mm-hmm. And then Stuart, as far as the customer is concerned, I think that we've seen, I can remember Friday, March the 13th, the Prime Minister called us transient places, public transient places, and also having essential activities, which was really important to ensure that we're being able to remain open all throughout the period. I think we're seeing from a customer point of view that they've got greater engagement within the community. So is there lessons that we can learn as far as not just dealing with the health authorities, but also the customers in terms of what we do bring to communities?
Yeah, the industry's highly evolved, right? So if you think of what we've done through Angus in a lot of cases at SCCA, we've been able to talk to health officers and health ministers so that whatever is happening on the ground can be, at least we're consulted with, and whatever we do is in consultation with them. But so far as customers are concerned, they, I think, have a heightened degree of comfort around coming to shopping centres as the focal point of their communities, which they rightly should. So, we're still going to market to them to keep in their mind's eye, but ultimately COVID has basically proven to the Australian shopping centre customer that we are the go-to place through thick and thin, because that's where they live, work and play in their week in, week out, month in, month out, year in, year out, and we're there, right? But in the end, the learnings have got to be just more than from us with our customers. It's got to be how the feds maybe take a bit of leadership with the states and just don't let them go spearing off in all sorts of different directions, and actually try and get some unity around how they approach these things, because it's been frankly, dealing with each state's been a pain in the neck.
Mm. But a lot of it comes down to trust, and I think the way that we as a collective industry have engaged with the consumers, but also our retailers have acted as well. I'd like to think that we sort of come out of the pandemic in a much better shape than we went into it, and we've built up a lot more trust with our customers, given the way that we've all responded. Yeah,
and I agree. I think there is a mindset now where people do understand what the industry contributes, and I think there's a greater role, as I said earlier, about the economic recovery, that people will be able to see that further. One of the areas that certainly we're seeing is that the community and our customers are really interested in sustainability. So has has the pandemic changed our principles in terms of looking at sustainability? Has it reduced our efforts? Has it restrained us? So, David, what are you doing?
I think it's sped them up. I mean, look, I look at our shop and we've got a pretty lofty ambition of being carbon neutral by 2025. And, you know, certainly with what's been happening over the last year, that's just accelerated the need to do that. So particularly if I look at our shoppers, I mean, customers are demanding this now, and our millennial shoppers particularly, you know, they're very astute, they're very aware, and they're very socially aware. So, you know, from our point of view at Lendlease, we've been very focused on sustainability for some time. Our wholesale vehicles are, you know, placed at the best in the world. So our investors are demanding that, but it's also driven by our customers. So I see a huge focus, particularly around water, waste and energy. But we've been on that journey for some time as an industry. I think the new sustainability is social sustainability. And when you look at this pandemic, that's really escalated that need. You know, customers are calling out to us, they're coming to our assets. It is their community, it is where they meet people, it is where they spend their time. So, you know, we have a really important role to play in that. So I think that evolution of sustainability will really shift, and it's not going to be so much about, you know, water, waste, energy and carbon. I think it's going to be about how we actually respond to people, how we interact, and how our customers interact in those spaces.
Yeah, if I could just maybe add to that, Peter, I think that that's absolutely crucial, and something that, you know, we've done as a result of you know, what's been going on in our communities. And most of our assets are actually in quite low socioeconomic or regional communities. So we've just entered into a 3-year partnership with the Smith family, you know, identifying that, you know, there are more and more issues with poverty and other challenges as a result of, you know, of this COVID crisis. So I couldn't agree with you more.
Yeah, because I think, you know, sustainability and running responsible business is just more than environmental. I think that, you know, that's a really good point. And I suppose on that track, you know, when you think about what we do with our people and the industry, what are each of you doing in terms of improving diversity and inclusion throughout your organisations? So, Peter, I'm going to start with you.
So we have diversity and inclusions committees, and obviously we've set our own requirements and milestones in terms of achieving targets. At the moment, unfortunately, over the last 12 months, it's probably gone a little backwards through this COVID period, to be honest. But fundamentally, we have targets set at our EC level, driven by board, programs in place all the way through the company, to encourage through graduate recruitment programs and then fostering that diversity and inclusion all the way through the company.
Stuart, same with you?
Yeah, same. I mean, we have all sorts of different initiatives going on. Obviously, Darren, along with, you know, I think David Harrison and others are on the Male Champion of Change initiative. That's all going on. There's all sorts of different, you know, efforts going into making sure diversity and inclusion's front of mind. And as David said, boards are, you know, fully bought into it. So we're all, yeah, on the right journey there. Just back onto the sustainability front, though, I think the right point to make is that whatever companies are doing, investors in the, you've got to look at capital sources, right? So investors in the funds or in the private markets, wholesale funds, as David said, or in public markets are demanding sustainable outcomes, and most of us have got zero carbon emission targets by 2030. So ultimately, it's driven at a lot of other levels than just customer, and you're either on board or you don't get the money. So that's the way I look at it.
It's always a good test. Always a good test.
No money, no honey.
No. So we've got a number of retailers here today, which is great to see. But from a retailer perspective, I think we all understand and know that those retailers being successful are ones which are multi-channel. Basically, they give the customer the opportunity in terms of how they're going to shop. What do you see the changes we're going to see within the industry and with your centres into 2021 in terms of facilitating that? Greg, maybe I'll ask you first.
Yeah, our portfolio is very heavily focused on supermarkets and convenience. So about 2/3 of our total sales that we generate through our portfolio is from our supermarkets. We've worked really closely with Woolworths, and I see Ralph's here today, and Coles. So about 80% of our supermarkets have got click and collect or home delivery capabilities in them. So it's a matter of participating at every step of the value chain. So the supermarkets are investing very heavily in technology around the fulfilment of goods to customers to try and help improve that margin, because still the best transaction for one of the supermarket operators is when the customer walks through the front door of the supermarket and picks and packs their own trolley and puts it in their car and takes it home. So still there's a massive role for the existing store networks to play. I think in Woolworths announcements in the last month, they've said that about 80% of their home delivery will be fulfilled through stores once they've got their technology in order. So it's a matter of understanding that store networks do matter, and store networks have got a role to play both in the first mile and the last mile, and that's been a continued focus for us.
Are we going to see that customer behaviour continue in terms of, I suppose, blurring the lines between physical and digital? So, Peter, do you have your view on that?
No, absolutely. I think it's the way of the future. So, just to add to Greg's comments, we launched a contactless click and collect partnership through all of our Victorian centres. It's been successfully introduced. We fast-tracked it as a result of COVID. I think the next phase will also be a delivery program. It's for us, it's about similarly every element along that supply chain. How can the industry facilitate the transaction between a customer and the retailer at any single point in time? So for us, I think it's an evolution. Clearly, the retailers that have really strong omni-channel businesses have been the most successful retailers, or the ones that essentially are non-discretionary retailers. But the combination of both have really risen above during this period of time. And I think it's only going to accelerate into the future. So we've got to find a way using technology that's already in the shopping centres to facilitate a way to play in every single element of that space.
Mm-hmm. I think the other interesting thing, Peter, has been the innovation that, particularly in our portfolio, we have a lot of mum and dad retailers, and what's been really fantastic to see is that this has actually forced them to think differently and to really be innovative about their business models and how they might operate. And, from the simplicity of the fast food, using Uber Eats and all of those other different operators, right through to actually, fundamentally changing business models. So I think that, we talk a lot about the negatives out of this, but there actually has been some positives. That whole scarcity, is the mother of invention, has actually been a really great positive, I think, out of this for small independent retailers.
Yeah, that's a very good point. Very good point. And when we were talking earlier about the community, and I suppose the importance of our centres now being part of the community, does that change the plans that you have for your locations, your destinations, as far as what it means in terms of from a development pipeline point of view? So maybe David will start with you.
Yeah, I would definitely say, from our perspective, we see great opportunities to really start to diversify the mix in our shopping centres. We're quite fortunate, we've got a lot of land in a number of the assets that's currently got on-grade car parking on it. So I think the reality is for many of the bigger shopping centres, they will possibly get smaller. So in terms of pure retail, so unless you're thinking about what you do with that space, you're going to end up with some fairly ordinary investment returns. So we see terrific opportunities where we have strong public transport infrastructure, where we have strong surrounding amenity to things like universities, hospitals, and civic infrastructure to really start to think about how we can add other layers into those assets. I see mixed use as being inevitable, and it'll be dragged there by redundancy of potentially a number of bigger and smaller boxes. So, we see a real play for residential, be it in residential for sale, build for rent, office, remote office. There's some really interesting dynamics happening around our CBDs at the moment. We've had discussions with a number of major space users about whether there's a hub and spoke type model, and with what we do, being predominantly a mixed use developer, we see some really strong synergies there. So I do think the suburban model will really get a kicker from this shift in office, because let's face it, many of us, and I'm one of them, that's still working from home. And organisations, when they do get back into the office, for those that aren't, and even for those that are a very different place. So the reality is, I think many of us will probably want some flexibility and continue to demand that, and those employers that are able to offer that will be the employers of choice. So I do think there's a flexible workplace model coming, whether it's 2 days, 3 days in the office, 2 days, 3 days from home or travelling. For mine, that's par for course. So I think we've got a really strong opportunity to play in a meaningful way in that space and provide quality amenity and quality civic space, along with retail. And if we can get those layers right, that will drive really strong resilience out of the underlying retail revenue.
You've got to look at your assets, in a independent way, right, relative to the market you're in. We're just about to convert a bulky goods centre into an industrial estate in Western Sydney because land prices are going through $800 and $900 a metre. And the value of last mile in that location exceeds, the value of a retail dollar. So, you do it. But, what we've got to do as an industry is back solve from what it's going to be. In 2030, it's a $450 billion pie, and about 25% is either going to be pure play or online or omni-channel. And we know, you look at the Target example or case study, against a retail dollar that's transacted by Amazon, and Target's more profitable because they've got the click and collect option and the physical store networks. Doesn't mean to say Amazon's not a great business, but why do you think they've got $40 billion worth of logistics costs a year? That's why they're now starting to run their own trucking fleets. Mm-hmm. So, we're dealing with them in, on the diversified platforms like Chubby on a first mile, last mile, any other mile basis. Once, something arrives at a port, we want to be a property provider to retailers from the ship to the shop shelf, as it were, until the product gets home. So you've got to use your shopping centres in that mindset, I think, in order to actually play properly in the market, because that's where it's going.
Mm-hmm. And Peter, what about you in terms of your development pipeline at Vicinity? Are you thinking of changing the scope of the number of those projects?
Yeah, look, Pete, we were moving down to mixed use, what we term it as retail-led mixed-use development. So I think highest and best use. Well, fundamentally, the overall thing is I don't necessarily think Australia needs a huge amount more of major regional retail space in its traditional format. But that said, every individual centre needs to be assessed on the highest and best use of that individual centre, given the context of the market competition, and then defend your market competition like crazy. And so if you take that aspect and build master planning across all your centres to really understand that, you'll get to an overall strategic plan for your whole centre. So for us, we've always moving away from traditional commodity-based, particularly in mid-market fashion, and trying to move more to the experiential. On retail anyway, unfortunately, the experiential side of the business was the categories got most impacted by COVID. But we take a view COVID is, there's lessons to be learned from COVID, but in 2 years' time, we'd be treated like the GFC. And that experiential side is still the way to go. The hub and spoke model around decentralisation of office, we think, is a real opportunity. Obviously, highest and best use on the site is not always going to be retail across large sites. So building commercial, we opened, perfect timing, we opened a 5-star hotel at Chadstone in November last year. But you don't build these things for a pandemic, and we think it's a great addition to Chadstone for the long term. And then there's build-to-rent residential. There's 500 apartments at the Glen in Victoria that's about to be handed over to their owners. So we think that's a way to be complementary uses to drive our retail business, particularly Monday, Tuesday, Wednesday of the week, overlaid with technology to make sure retail is still the core, but we have great ancillary uses. That's
always been the beauty of shopping centres, is you can adapt them and change them as your markets and your trade areas change. It's been the way for many, many decades. So unlike other asset classes where you're stuck and there's very little that you can do and you're operating in a market where you're a commodity, certainly in our space, you're operating in your own environment, your own catchment, your own trade area, and you can do whatever it is, whether it's a mixed-use resi scheme or alternative uses like healthcare, and that's what I love about our business.
Yeah. No, and I think another big change which all of us are engaging in is technology and the importance and the improvement it does to us in terms of connecting with the customer. As we all came into this venue, we had to scan the QR code. The government knows exactly where I am all the time, which is fantastic to know. But what do you think we're going to be doing in terms of using technology to get closer to understand the customer in that regard? Have any panellists got a view on that?
Yeah, I think we're on a journey that's rapidly escalated right in the last year. I mean, how many of us would have been happy to scan our phones at the door 12 months ago? And I think as a society, we've actually been very, very forward focused in terms of that. So, the real opportunity is how we harness data and do it in an ethical way to actually capitalise on opportunities. So, technology's been running through this industry and disrupting it for some time. I think, if anything, we now get to embrace it as a result of where we've been for the last 12 months. Certainly click and collect is a great example of that in terms of some of the more successful retailers in the country. Those models are extremely profitable. I think the key for us is how do we actually participate in that space and what is our role to play. And the more data we can collect, obviously, that just opens up a whole bunch of different opportunities. When you look at it now, I mean, we heat map centres, we collect data out of car parks, we can source credit card data. There's a whole bunch of stuff that we just weren't using probably 2 years ago. And the ability for us to actually market to our customers in a targeted way is just so powerful. So I think if we can harness that, that really does augur well for where we go over the next few years.
And how are you using that data in a way that the customers fully understand what that data is being used for, rather than just being seen as being tracked around the centre? How do you make sure, we've got obligations from a privacy point of view in terms of ensuring the customer knows, but there needs to be a sense of value for providing that level of data for the customer getting some benefit back from that.
We're all customers in one way, shape or form, and in the end, it's feeling a part of an aggregate as opposed to your information being used specifically. So to me, as long as I'm feeling like my information is being aggregated, by whoever it is and used to be thematic, then I'm quite comfortable. But if you make people think or create a situation where people think that it's actually their personal targeted data, I think that's probably a place that you've got to try and avoid if you can.
I think it all comes down to trust too, doesn't it? I think of a classic example, Woolworths. I used the Scan and Go the first time the other day, Ralph. I'm pleased to say it was a big thumbs up. Super time saver. So, for someone busy, I think that's, really great. And, Woolworths, I think, is a great example because I trust Woolworths. They're a very trusted brand to me. So I'm very happy for them to have my information and for them to make suggestions and things that make my life easier. But, there are other scenarios where I think I really don't like that I have to check in, on all these different check-in apps everywhere that are capturing all this data about me. And even though I say I don't want to be marketed to, they still somehow seem to market to me, So I think it really depends on the level of trust we have with our brands as well.
And Peter, are you seeing any interesting technology out there, other than, from a car parking point of view, scanning, payments is a big thing which we're seeing a lot of change in?
Yeah. Well, I might just pick up that first question. I'll come back to it, Pete. But just in terms of the customer, I think firstly we've got to have to define who the customer is. So for us, there's multiple levels of customer, but in terms of technology, what we're doing is firstly defining the customer as the retailer. So as a result, what we're trying to move towards is, and again, 2020 has been an interesting year in terms of we've been closer to the retailer, all for the wrong examples. It's no one's fault, but a lot of negotiations going on. But we're really trying to move to a more equal share of information flow and transparent nature to ensure that we're making right decisions in terms of investment. And that's where I think technology can move to in the customer. So there's a whole governance around how landlords can work with retailers using technology into the future to make the right decisions. In terms of other technologies, look, we've introduced some interesting technologies again most recently, just simple stuff like digital queuing systems in a COVID environment. I think that is a really simple model. It had some teething problems, but I think it's a really simple model for peak periods. Having live data for customers on your websites to understand number of car parkings utilised or density within the malls that is live feeds from our phones these days. It's really interesting from a customer, really interesting from the retailer. And so I think there's a whole bunch of incremental technologies that will help. The payment system will be key. Without a question in the world, to get all payment systems onto one platform where someone can buy in store, buy online, all using one platform to deliver goods from wherever they are, using one payment system, I think is going to be material.
Mm-hmm. And when you think about that use of data to be able to, I suppose, improve the retailer's understanding of the customer and the way that it's changed, the type of product and services that the consumer wants, how does that change your view in terms of looking at and curating a retail mix within the centres?
Yeah, look, in simple terms, what we're trying to do is essentially, from a retailer's point of view, in very high-level simple terms, the data that they have inside their store is fantastic. And in the main, the conversion data, the understanding of the customer. But what we're trying to do is to identify customers when they hit the property before they hit the retailer's store, and identify where that customer particularly goes and which stores that they may go into before they go into the retailer store. So that is where we see some benefit on embedded networks and technology we put within our centres. So that is to really understand from a data share point of view, particular customers, their travel paths, their densities, their stores they're going to. We don't know what they're buying, but we know when they cross the line and why aren't they going to a particular retailer store. And then we work that out to say, well, if your particular store in this shopping centre has these co-tenancies along, then you have performed relatively better than the rest of your benchmark. And so in this centre, we can create the same type of environment.
Yeah, I think it's important in terms of, as you say, aggregating the data and being able to share it with our retail partners as well and as ourselves in that regard. You know, I used the analogy last night with a CEO of a department store, and we're talking about the fact that my wife is a My One customer, probably is not regarded as a great My One customer. She probably doesn't spend that much money. But when I see her credit card bill every month, she spends a lot of money, so should be a key target to that department store. And it's how do you aggregate that and see a wider perspective rather than a potential narrow perspective of a retailer. When you think of what we've gone through, the pandemic and the support that the industry has given, particularly to the SMEs, I think that Angus and the Shopping Centre Council put out that the support has been now over $2 billion, which is quite substantial, one of the few organisations and industries which is supporting another industry. But I think, again, it's been key and important that we have supported the SMEs in particular, but to be able to make sure they get through to the other side, using ScoMo's words. But how are you seeing, the SMEs today? Are they coming out of it? What additional help do you expect them to see? Maybe Michelle, get your view first.
Yeah, sure. I was just saying to someone over lunch that, we were probably averaging, we have about 1,800 odd tenants in our portfolio, the majority of which are mum and dad retailers, and of those SMEs, it's probably around about 800 of those 1,800 per month that we were seeing assistance being given to under the code. Last month, which was October sales, I think there was about 55 retailers that actually had applied for assistance. So that's a very significant swing, and it did drop a little bit towards that. It wasn't 800 to 50, but I think that's really indicative of where sales performance has actually been. And look, I think it is quite different. There's quite a dichotomy there, I think, in terms of sales performance across some of the assets in those neighbourhood centres that we own. I think there has been, and I'm sure Greg would attest to this, quite a trend towards shopping local and staying local. And we've certainly seen that evidenced across our assets. And in fact, in my 30 years, I've never seen supermarket sales this strong. I've never seen discount department sales this strong. And I've actually never seen specialty sales this strong, excluding, Victoria or when we've been closed. So, I think it's really created a very different environment. And do I think that's going to, maintain the current status quo? Not necessarily, but I do think that, for the short term, there's a comfort and a convenience with, being in their local communities. So that's certainly what I've seen over the last little while.
And Greg, you see the same?
Yeah, largely. I think just in terms of our interactions, say in April and May when we're at the height of the activity, it's fair to say that most of the SMEs were really quite pleasant to deal with, if that's such a word. Mm-hmm. It was the non-SMEs that I think really should look in the mirror.
And I should say not all of them. Sorry to interrupt you, Greg. In fact, I think there was probably, the minority. But I think that's when you really talk about retail partnership, when you can actually have a dialogue and reach an outcome for both parties. But yeah.
So the SMEs, I think, interacted in the spirit of the code. But the irony is that the businesses that weren't, anticipated to be a part of the code, who thought they should be part of the code,
or above the code.
Yeah, more to the point. But anyway, we're largely through that now.
Might just play the contrarian a little bit here, because I think we've all got to be a little bit careful, right? So the SMEs, if you look at the SME market broadly, banks are kind of saying, you know what, we don't really want to play there. Why is that? What's the credit risk? And you need to establish that, for yourselves and your own businesses. But Why I look at it is once the code's over and all the rules are off, it'll be at one end of the spectrum will be retailers VAing themselves and reorganising to do what they do from time to time, all the way through to, they'll be fine, but ultimately their sources of capital are going to be from non-bank lenders, structured credit outfits and other alternatives, because ultimately if the banks aren't there, they've got to find another way, and they'll be looking at landlords as well.
Yeah, I think that the cost of doing business and the availability of capital for the SME retailers is going to be challenged in the future, and certainly that's an area that I think that we're certainly working with other groups to ensure that the government is making sure that there's going to be that support by the banks. The cost of insurance, etc., it's been very difficult. So, Peter, what can we do to be able to do that as an industry to try and make sure that those retailers, who are, because we are making our own credit decisions in terms of each of our businesses with respect to taking a financial risk with regards to a retailer, particularly an SME retailer. What is it we can do to help, the government understand, what's going to potentially transpire at the end of March when the stimulus, merry-go-round stops?
Yeah.
You get all the good ones, Pete.
Yeah. Look, no compulsory shutdowns would be a start, because, look, fundamentally it's all about cash flow, and I completely agree with Stuart. I'm more on the contrarian view. I think the SME performance has actually been a bit spotty, at least in our portfolio, where we're weighted towards Victoria, weighted towards CBDs. Queensland, WA, South Australia, Tassie have been great. We have nothing in Northern Territory. But once stimulus comes off, once banks operate in a business as usual manner, once the quasi Chapter 11 laws that have been trying to race through from the government come into place, I think there is some risk. So for us, I think from a government's point of view, there is that encouragement to making sure credit lines remain. I think credit's the main thing for SMEs. It's a working capital business. They typically, one thing I think coming out of COVID is I think the industry had a relatively poor understanding of the financial health of the retailers that we actually did business with, except for the publicly listed ones. And so coming out of this, I think we have a far better understanding, but still not to the degree that we need to. And part of that is really with the SMEs. So I think the availability of credit and ensuring government allows that to continue to occur is important. I think we have to be flexible. The last thing we want is to be mandated with a commercial code of conduct. We want to get back to normal business practices. But that said, it's not going to go, end the code at the end of December in Queensland doesn't mean that the 1st of January goes back to 100% sales everywhere. I think that there's a responsibility for the industry to ensure that we support SMEs through into 2021 on a case-by-case basis where required.
Yeah, and I think talking about sales, we're certainly seeing the lead up to this Christmas as being pretty positive from a sales perspective, across the board. What is it that, as an industry or shopping centre owners, that we can do to kind of speed up that retail recovery, that retail-led recovery? Is there anything that you're thinking about in your respective businesses to be able to help facilitate that? David, you've got?
I think we're all doing it in our own way. I mean, the government's been very proactive in terms of putting fiscal stimulus into the market, and the majority of us have benefited from that. And when you look at the recovery in sales, so the real opportunity is how do we keep that momentum? And March is going to be a pretty interesting month, right? So, I think if we can continue to work with our retailers, really understand what their business models are. And I know as a shop, we've tried to be quite proactive in terms of doing a lot of deals, because the reality is we did lose a lot of retailers running into this process, and unfortunately, we run the risk of losing a few more if things don't stay where they are. So, certainly from our point of view, it's been about working with our strong partners, doing deals where we can do deals, looking at vacancy, dealing with that proactively. And giving those strong retailers the opportunity to continue to remain strong and grow. Coupled with that is how we deal with our SMEs. I would echo Peter's points. I mean, there are some that have been very successful, but there have been others as well that are constrained and that have challenges with capital, and that are going to be having some pretty challenging discussions with banks. So I think the reality is the landlord has probably become the lender of choice in a number of those instances, and you know that we need to get that balance back somehow into how that operates.
And talking about capital and potentially being a lender of choice, whilst we are all enjoying, you know, historically low interest rates, have you changed your return expectations yourselves in terms of looking at when you do invest capital, or provide capital to a retailer in terms of fit out, etc.? Have you looked at changing that?
I think it all comes down to risk-adjusted return. So, you know, if there's accelerated risk, then you have to have a higher return. But certainly, when we're looking at core assets, our co-investors from the wholesale markets are looking at convenience-based retail assets as lower risk, and as a consequence, they're prepared to accept a lower return. And it's fair to say that there's a significant weight of capital looking to invest in those sort of assets, and we've seen a significant amount of transaction activity occur over the last 4 or 5 months, which is really good, and it reads well for valuations leading into December as well. So I think there is this concept that was lower for longer. A lot of people are now saying lower forever. So that, of course, will move to a change in, you know, what the bar is for investment returns.
So
I think that will continue to temper, but based on the risk profile.
Sure.
Well, I mean, simply put, real estate, whatever the asset class is priced to the bond yield, right, to the risk-free rate. So return hurdles should adjust according really to your appetite for, whatever it is you're doing. And, you know, you see, as Chubby said, if you see shopping centres transact in the 6s and 7s, core caps, that's a spread of like 600 basis points or more, right? So that's pretty attractive. And so
then you've got the spread to industrial trading in the 4s.
Well, that's my point, right? So in the end,
retail's looking pretty good, if you ask me.
Oh, yeah. Industrial's pretty good too. But anyway, that's another matter. The way I look at it is, return hurdles will change, and therefore shopping centres look like a pretty good buy, even if you're underwriting a deal. On new market rents, as rents adjust a bit, and we can all sort of say that's not going to happen. We know it is, with a few negative spreads around the place, etc. So in the end, you're seeing deals that are, I think, compelling, and that means, you're right, capital's going to fly out of the other sectors back into retail. And to the point of your question, what can we do to accelerate the sales momentum? It's to grab it, use it as a way to raise capital and reinvest in the shopping centres really, really hard to actually make them more and more compelling places to come to, because you can only get blood out of a stone for so long. So take advantage of capital markets while it's there.
Yeah, and I think also, another thing, not just the capital markets, but even, the stimulus or where people are spending their money, who we're competing with. The one number I didn't know, and nearly everyone knows now, is the $64 billion that Australians spend on going overseas every year. That's just amazing in terms of, so where's that money going to be going now? What is it we have to do, and what do our retail partners have to do to be able to encourage spend in our centres for those goods and services that, typically they would go and spend that money overseas and not necessarily spend it here. So is that something that you are looking at as far as your business is?
Well, I think it comes down to your retail mix at the end of the day. And I mean, it's more important than ever to keep your retail mix customer relevant. And, those that have got the best offer obviously are going to win in that game. So, from the retailer's perspective, they want to be with partners, I assume, that are pulling people into the door and that are on the same journey. So, I think that is the key. If we can attract that discretionary spend that perhaps was being spent in Thailand, Bali, Fiji, wherever it was. We've actually got a nice piece of the market at the moment to be able to do that. So, I think if you can invest in your experience, that will certainly help in terms of getting some of that dollar.
Peter?
It was a fascinating number. I think it's a net incremental $8 or $9 billion that people spend overseas versus tourists coming to Australia and spend.
Yeah.
So for us, that was obviously, a couple of things. We obviously went through an equity raise. We had some repair done on the balance sheet. There's obviously clearly a portfolio that is very non-discretionary in Victoria and major capital cities, but we made sure that we kept investing. So we kept investing, particularly in marketing, get back to market as quickly as we can, capture that type of expenditure that's there, support retail through this process, unless Victoria was shut down through the process. So that type of activity is essential.
Is there any other, stats and numbers and, analysis that we need to do as an industry in understanding the consumer better to be able to make sure that we take more of our market share in terms of that regard, or facilitate our retailers to take greater market share? It's something that the teams have been looking at. Stuart, have you been?
Yeah, I mean, I always think of, the broader economy and how is retail competing as efficiently or as effectively as it possibly can within it. How does it go about competing with every other thing that people can do with their money, be it buy cars or go travelling or do whatever, rather than come to shopping centres and buy stuff. And so what we're always doing is thinking of how we compete more broadly as an industry with our portfolio in order to be able to capture every dollar that we can. And obviously using technology and the internet and, making sure people are browsing online, buying in store, vice versa, to make sure that we are as efficient and effective as we can be in the economy is the key more broadly. Just depends on how your portfolio is situated to do that.
I think another concept is expanding the sort of the spending capacity in which you play. So we're putting uses into our centres that 10 years ago you wouldn't have dreamt of. So healthcare, personal services, all those sort of things. So rather than just relying on traditional retail expenditure to expand the purpose of our environments, I think is an opportunity for all of us. And it's been happening for some time, but I would suggest the activity that we've all been engaged with this year will accelerate that transition to alternate uses. And ultimately what we're dealing with is really high value pieces of infrastructure that are incredibly well located that can perform many, many functions. And I think that's the opportunity for all of us. We've been, I think the way that Susie Mack put it at an SCN function a while ago, we were the disruptors, 20 years ago. And I think there's opportunities for us to continue to be the disruptors in the current market today.
Yeah, I think it's a great point because, even historically, you look at the changes that have happened in all of our centres in terms of the retailer mix, and you don't see it because it's an evolution rather than a revolution. But, there is being substantial change. You think of the top 20 retailers today compared to 20 years ago. It's a very different landscape in terms of...
Well, and I think 20 years ago we were all trading 9 to 5 and a lot of us weren't trading Saturday after midday and Sunday at all. So we've learnt to really tap into a bunch of different markets. And the entertainment evolution, if you like, that we've all been on that journey with was a reflection of that. I think the next evolution is how do you just continue that economy 24/7, because online retail is 24/7, right? So we've got to compete for that share of wallet. We've done some interesting things up at Sunshine Plaza. We've just opened a high ropes course in that asset, which is actually the largest high ropes course in the country, and trying to blur the line and open up almost a tourism element into that asset in a different way to traditional retail. So I think we've all got our examples of that in terms of what we're doing. And as an industry, we're pretty good at evolving, right? So we've just got to keep doing it.
I think, Pete, you've got to think about where the profitability is as well. So if you think of what's happened in the last few years, say 5 or 10 years, it's the internationals have come through and really, undercut a lot of our, specialty categories hard, especially in fashion. And the profitability model has changed in their P&L constructs. You've got big major stores, way more profitable than some specialties these days. You look at the likes of Bunnings with 12 or 13% EBIT margins. Those are margins that a lot of specialty retailers would kill for. So whatever you do in adjusting your businesses needs to be cognizant of the profitability. But unfortunately, when we all came through the industry in the beginning 20 or 25 years ago, sales was really the guiding hand, and that sales is only going to tell you a very small part of the picture these days. It comes down to profitability and making sure you situate really good profitable retailers in your core real estate in order to be able to do well, because it's changed.
Picking up Dave's point in terms of working 9 to 5, what are each of you doing as far as flexibility, as far as your employees are concerned? Has COVID changed that in terms of your work practices? Are you thinking differently for 2021 and beyond?
We had a fairly good setup before COVID, thank goodness. So we've had all the systems and technology in place. So when we did lock down the offices, it was a fairly seamless experience for us. We moved back into the office here in Sydney, where about, I think, 60-70% of our workforce is located in May. So we came back early, and that's been, I think, a good decision for us. And now we're back to the form of flexibility that we had pre-COVID. So it's up to our teams to manage that themselves. and that works really well for us as a business and works even better for our people. So it's more of the same to that end for us.
Stuart?
I think flexibility is something we've had, on the agenda for a long time, being as long office as we are. So we'd lease you an office space for anywhere from an hour up to 20 years, depending on what you want. So we kind of get flexibility. We got, WeWork and others in lots of different buildings. So we sort of watch what's going on. And, I think people kind of did like working like that. Maybe COVID has sort of shifted things from, we just can't be all piled in on top of each other anymore. And we kind of like the structured office layout. We do want sort of, 12 square metres for every person, not 2. And we want to work that way. We have structured and organised flexibility with our staff so that they have a plan, not just Monday and Friday as depends on how I feel kind of thing. And that seems to work well too. What I do like is that the technology that quite inexpensively we've got everyone wired in from home wherever they've got to be, and I think you would hope that over time, that rather than being stuck in traffic jams and things like that, you're working on the road less time and actually either in the office or at home doing it. But in the end, you can't keep a culture together or innovate really if everybody's here, there and everywhere. You've got to be together in a room creating ideas and innovating. So I think we like to have them come into the office and we like seeing them and being together.
And Michelle, has it changed the way providing flexibility and the way that you manage people? In terms of, you can't just check whether the coat's hanging on the chair anymore to think that people are there?
Well, look, I think we're a relatively small organisation compared to, the rest of you. We're sort of 50-odd people. So I think we're, quite an anomaly. And I think we were very lucky that we had a very informal flexibility kind of policy beforehand anyway. So, again, we were back relatively early, certainly the sort of senior executive, but we found that there's kind of two camps, if you like. There's the people that actually were dying to get back into the office, because maybe their environment at home, they had one wife at this end of the table and the husband at this end, and, they have to go outside to make phone calls or whatever. To those who, they do not want to come back into the office, and that is a bit of a more challenging, I suppose, mindset. But we encouraged all our teams to come back into the office about a month ago, and we'd probably be running, 4 days, 1 day at home, probably, if I was to generalise. But we have given, managers discretion and also flexibility around if people don't want to travel in peak hours, they can vary hours and those sorts of things. But, I think as well as innovation and collaboration, I think one of the detrimental unintended consequences is potentially about developing our people, because it's amazing the rub-off that it has, talking to, more senior people in the kitchen or, in the corridor or around the water cooler. And I think that unfortunately it seems to be actually the younger people who don't want to come back into the office, where in actual fact they're probably the people that would benefit more from, the ad hoc conversations and so forth that go on. So I think it's going to be a really challenging, and probably more challenging for the likes of, Mac, who, Lend-Lease haven't come back to the office, and some of these larger corporates like your big accounting firms and your banks, and, that's going to be really challenging for them, coming into the new year and seeing what, how do they encourage their people, or do they in fact even encourage their people? Do they even want to come back into the office? So
and I think that's the challenge, right? I mean, we're all in a fight for talent. So, there's going to be those that want to be in there. There's going to be those that don't want to be in the office. So how do we find that right balance where we can still collaborate, where we can still innovate? I don't think anyone's got the answer to that at the moment, but I think we all know flexibility is going to be key moving forward. So we all need to embrace it in some way and work out what our own rhythm is.
So Peter, you're going down to your redecorated office. You'll see it on Monday, which will be good. Hopefully no one else is squatted in there and you have to kick them out. But what have you been able to do in terms of trying to maintain culture, with people working remotely?
No, look, to be honest, I think COVID's had some incredible advantages. You've got to take the good with the bad, and you never waste a crisis, as we always say. But with COVID, what we were able to do, and I'm probably a bit more old school in this, but we basically went into project mode. And I always think people work, as a developer, I always think people work better in project mode. And we moved the entire teams basically into key account management and moved them straight into project mode. And then we, to the working from home, essentially everyone was working from home with the exception of our poor frontline staff who would love to work from home, but they were the poor frontline. So in terms of motivation, the quickest motivation that we did, we weren't necessarily that great and were very ad hoc in our communication to our teams. So we went into constant communication on a daily basis with the EC and the senior leadership, and then we went into weekly communication and then led into fortnightly communication with the team. So we took them through every single component of what we were doing this year in over detail to ensure they felt engaged in the process. Now the trick is, we didn't do a huge amount of strategy through this process. I know others did. So the trick is now to transition into strategy and to grow out of COVID. And I think some of that to what Stuart was saying, what Michelle was saying, is you need to bring people back face to face and to have that collaboration. And I absolutely do think, I mean, the poor guys, I mean, I know Simon started during, the poor guys that started new roles haven't met their teams and did everything via VC. I mean, it's just a nightmare.
But I also think your point, Peter, about the frontline workers,
yeah.
We can't underestimate the role that all of our teams in the centres have played since March. The work that they've done has just been exceptional in keeping the environment safe, keeping the customers calm. When they're all rushing around trying to find toilet paper, they were there. So I just tip my hat to all of the centre-based teams who have done an outstanding job.
No, I agree.
And I should add, like we actually have outsourced partners that do that. So, a special call out actually to all of those outsourced partners, because we often don't think about those, but, the Colliers, the CBREs, the Knight Franks, the Comacs, those guys have really, dug deep and partnered, and they're the ones that have been on the front line for us. So big thank you to all of you.
Yeah. That's as Peter put it, a benefit of an event like COVID is to embrace what you've had to do and use the good bits of it. So, if you think of the portfolios that we all run, they're quite far flung all over Australia and different places. And so to be able to connect with centre teams, way more easily with Teams and Zoom or whatever sort of functionality you're using. As I know, a lot of our centres feel more connected than they ever have. And they've had to present in more senior forums, and the whole thing from a culture point of view actually has been quite positive when you look at it that way. Connectivity to remote places is better, I think.
Yeah, no, I agree. And I think that, again, we've got to thank the whole industry in terms of, as you say, I think that being on the front line and having the centres operational all the time throughout the pandemic and really providing those essential services has been great. That's going to be a bit of a wrap for this afternoon in terms of discussion. I'll get Michael up in a second, but hopefully you've enjoyed the conversation and discussion. I'd like to thank the panellists, Greg, Stuart, Michelle, Peter and David. Thank you. Yeah, thanks for sharing your insights, particularly what we've learnt through COVID and what we're going to utilise and expand upon into 2021 and beyond. Hopefully everyone has a great Christmas. I'm personally looking forward to a break, and we're certainly looking forward to 2021 being a much better year. So thank you very much, and Michael, I'll let you finish off.
There's not much of a big finish. It's just thanks for coming. And what a great panel and what a great discussion. I mean, you can look there. You could have had a pin drop for the whole hour. There was a little jocularity there about whether shopping centres were good investments, and there was a bit of fun about the basis points. The reason shopping centres in this country are a great investment is because of the expertise that's involved. It's the greatest in the world, and it surpasses anywhere in the world collectively. And when you hear these guys and you hear them talk and you hear what the discussion is and the quality and the depth of the discussion, it's just fantastic. And that's why shopping centres in Australia are great investments. Peter, I'd like to thank you very much for the moderation today. It was really fabulous. And thank you, the panel. You got my thanks. And thank you for being here. And thanks all our people outside. Hope you had a great time. I'm sure you did. Thank you. Cheers.